Hello and welcome and good morning to everybody. Thank you for joining us on Behind the Markets today. I am your host, Munyumba Mutwale, and I'll be taking you through our regular Mindset Monday conversation. I will be eventually joined by Vernon, hopefully. Today we're just having a little bit of a technical issue, but we are getting kickstarted. And as the old saying goes, the show must go on. So for those of you who are catching us live today on Facebook, Twitter, Instagram, wherever you're watching us from, wherever you're listening to us from, please catch us whenever you can, or just write to us in the comment section. If you're listening to us on radio, if you are catching this on the waves, please catch us on. Give us a shout out on what you are going through today on Mindset Monday. It is a new moment and a new week to kind of get ourselves stretched out. And there's an old song by a rapper named Memphis Bleak who said it very clearly in his chorus: I have my mind right, money right, and ready for war. And that is pretty much what Mindset Monday is built about. It's about getting everyone's mind right, directed pushed into the right direction, and getting you ready for the battles ahead and getting you ready to go into the right directions. So, thank you very much once again for joining us all here on Mindset Monday. And we are getting down to the bulk of things here today. So, if you are, as I said, if you are joining us, please give us your name. Give us your name, where you're joining us from, and shout out. Tell somebody who to join us in. So today we'll be talking about putting the right efforts in. So remember, Mindset Monday is kind of where we step away from all the numbers and all the jargon and everything, all the technical side of things, and we deal with the human side of things, the soft skill side of things, the kind of soft approach to things, because we have to understand that human beings are feeling machines that think more than thinking machines that feel. So today we are continuing on our Power to Change series. If you've noticed, we've been reading the book The Power to Change, and we've been going through the actual sections of it and where it's coming from. Good morning to Kelvin and Innocent. Thank you for joining us today. So we are going through the Power to Change series. But one of the things I wanted to start with, I know the big news last week was the debt talk, was obviously the clearance of our debt. And I wanted to paint a picture, especially as we get into this conversation about trying versus training, and why I keep saying this sentence to everybody. Zambia is getting prepared for the largest wealth expansion in its history, and you have the choice of whether to become a winner or a whiner. Okay, this is how it's going to end up. Now, I did say last week, I said, if you read in the Bible, Genesis 8:22, God says to Noah, after the flood, the flood waters recede, and God says to Noah, He says, Noah, they are, he says, I will not strike the earth anymore. I will not curse the ground that man walks on, and I won't destroy them, even though human beings are evil. So God proceeds to do something interesting. He says he won't strike it, but he programs the world to have three specific laws that actually hold very still in terms of somebody's ability to operate in this world. So God puts in three specific laws, and nobody actually, if you pay attention, you'll understand that these are the three governing laws of life. I just want to share these up with you. But I call these the three governing laws. And basically, and the Lord said in his heart, I will never curse the ground that man walks on, although the imagination of man's heart is evil from his youth, nor will I destroy every living thing on it. As while the earth remains, seed time and harvest, cold and heat, winter, summer, day and night will not cease. I want to just break this down for you so that you understand. What is going on here when he says these. He says that there will always be seed time and harvest. So God basically says, look, you guys are messed up. As people, you are messed up. So there's a high likelihood you are going to need to be punished. So I'm not going to do it anymore. I'm not going to destroy this world. What I'm going to do is I'm going to program this world to fight back when you act the way you do. So he said, look, for every outcome you want, there is going to be an input required. Okay? So for every harvest you are looking for, there's going to be a seed you need to do. So for everything you desire, there's going to be something you need to do. So there's always going to be a seed for every harvest. So you know the old saying, people, if you want maize, you don't plant soya. Okay? Or if you don't plant anything, don't convince yourself that something will grow that will feed you. That's poverty thinking. Okay? So the second thing he puts into the world is that there will be summer, winter, hot and cold, which means that everything will work in seasons and cycles, and things will not always be the same. Okay? You cannot bank on things never changing. So if you are resistant to change, you are resistant to the law of the world. There will always be a summer, there will always be a winter, there will always be a hot, there will always be a cold. Things will move between these things. So there will be cycles, there will be seasons, there will be variations. Risk is built into this world. So when you have an expansionary season that goes into the world, that means that that expansionary season has an end to it. When you have a downturn season, that downturn season has an end to it. So things have ends and start points. But if you notice, whether it's agriculture, whether it's economies, whatever it is, everything moves in cycles. Okay, so that's the second point, the second law he puts in. One, that everything you desire requires an input. The second one is that the world will always have cycles. He says there will always be day and night, meaning that things will always pass as well. Because when God created day and night in Genesis, he actually created time. So time will always pass in a progressive fashion. So even things like a wealth expansion, it is going to move in a progressive fashion. So you have to enshrine into your brain that there is a cycle to everything. So the cycle of up will eventually stop. It'll slow down at some point. Okay, it doesn't last forever. Even China went through a massive economic expansion, but even it experienced a slowdown. America went through a massive economic expansion. Even it experienced a slowdown. Zambia has experienced one before. Even it experienced a slowdown. Everything that has always gone up eventually comes down. Every day moves forward into the next day, and every outcome requires an input. These are three laws that govern the operations of this world. And no matter how much you wish and you hope, you can never circumvent those three. Okay? No, and they're found everywhere. Every single spot of the world that you look in that governs, that has a system attached to it, there is always the governing laws of this world. So I want you to just remember that. So even if we're going into a wealth expansion, your wealth expansion as an individual, okay, the economy is about to go into the biggest wealth expansion of the history of this nation, but your wealth expansion is determined by the inputs. So just remember one thing. The wealth expansion that Zambia is about to face is a season. It has a finite end to it. And it's going to be another one that'll come at another point. So there is a season here. So that's why I'm saying in the next 10 to 20 years of this country, you're going to see an economic boom that's going to move very strong. Now, or you're likely to see, let me put it so, you're likely to see that because a lot of the things are lining up very similar to the previous point, and the debt was the last overhang around it. So there's a lot of seasonal factors that are playing into it. A lot of things have aligned for Zambia to go into an explosive growth right now. So the other part also that you also have to start bearing in mind is every day is going to pass, and every day that passes, you are wasting it, especially if you're wasting it in debate and deliberation and, zinging each other, 1.8 versus the 2.8, all that. The more you do that, the less you're doing the right things. Time is going to keep moving. So you have to focus on actually doing the right things in this season. So making sure you're doing that. If you argue with the soil, okay, you're not going to get an output no matter what. So you actually have to plant stuff in the soil for you to actually get an outcome. Okay, there's no farmer out there who argues with the soil and maize comes up. They actually put seed in the soil, fertilize it, and manage it, and the actual crop comes out. Okay, so I want to just now pick up some of the trends here from the last economic expansion, and I really want to look at it here. This is why I said the coming wealth expansion. So I'm going to give you some indicators like I spoke about last time, and I really want to revise this from the 2004 to 2013 economic expansion so we can tell you the story about how this is picking up. The total wealth stock of Zambia grew by 1,192%, from 2.2 billion to 22.5 billion. Okay. Now, since then, obviously, unfortunately, it's only grown by 18% because that was a wealth downturn. Now, the wealth uptick was 1,119%, almost 12 times up. That's how the wealth of this nation grew. the average salary grew, the average purchasing power of the working Zambian doubled. It grew by 112%. In other words, the average person's salary was able to afford 2 times more than it was able to afford at the beginning of the cycle. So this is another thing as well. The Luce All Share Index went up by 592% during this period, from 766 to 5,300. Since then, it has only risen about 55%, so only 1/10 of it. In fact, the average real salary, and remember, I'm talking about real salary adjusted for inflation, has actually come down as well since then. GDP in dollars as well went up by 351% in real dollars, from 6.2 billion to 28 billion dollars. It has since contracted by 20% from 2013 to 2021 to 22.2 billion dollars. So that already tells you how there was this huge expansion following the last debt restructuring. So I've used 2004. The reason is because that was when 2005 was when debts were forgiven. Okay. So we have gotten news today that Zambia will only be paying 1% interest on its bilateral debt going forward. The 6.8 billion of bilateral debt, it will only be paying about 1% interest for the first 14 years. Then for the years after that, it'll be paying about 2.5% on average interest on that. So let's take a look at some of these charts that show this. So one of the first things we did see was we saw the economy explode upwards. And this shows you that from about that point where debt is dealt with, 2004, you start to see it explode upwards. Why? Well, the first things we started to see is we saw massive amounts of foreign direct investment come into the country. So whenever you got your debt reprofiled, people expect economic stability now. They're not worried about the FX rate. One of the biggest concerns of offshore investors or foreign investors is the stability of the economy and the forex rate. Okay, because that's where they lose a lot of money. They lose a lot of money in unstable conditions and bad FX rates. So if they have the stability around and the forex rate stable or expected to be stable, they do expect the economy to be a good enough one to operate in. They can take long-term decisions. They can invest very well. So what did you see? 2004, you see almost a tripling, if not almost a quadrupling of investment, and then another doubling again. So you saw almost about $11 billion worth of FDI flow into the country from 2004 to 2013. It started to come down in 2014 and then you to 18, and then you just saw almost nothing 2019 to 2022. There has been a little bit of a comeback, but this is the reality we're starting to see in terms of FDI. Okay, so the reality that you do see is there's a lot of investment that comes into the country on the promise of stability. Other thing that you started to see also is that because the government is now under less economic pressure or financial pressure, or let me say fiscal pressure, the government has a tendency to borrow less from the market, freeing up a lot of capital from banks. And also because offshore investors now want to buy your local government bonds, they're buying up the bonds that the banks are holding. So banks are holding less bonds, okay, because they get sold down. They start to sell down their bonds and they've got a lot more cash to start lending. As you can see in this chart from 2005, you saw that where it was almost 50-50 between government. The red line is government public sector loans, while the green line is private sector loans. You're starting to see that at this point, after the debt was negotiated, you saw a spike in private sector loans pushing up all the way up to, I think, the peak of February 2009. That was the credit crunch. So it pulled back down a bit, but it stayed up to about the 60% point. In other words, we went from every one kwacha loaned to the private sector to one kwacha loaned to the public sector, to a point where we got even as high as, for every one kwacha loaned to the government, 3 kwacha was being loaned to the private sector, but it leveled off at, for every 1 kwacha loaned to the government, 2 kwacha. So you had a 2-to-1 spread, in 2-to-1 ratio of money going to the private sector through the banking sector. So what can you expect? You can expect banks to be able to loan more. Okay, that is the next thing you can expect. So you can expect this huge inflow of direct investment. You can expect bank bond portfolios to be bought off very strong. And you can also expect banks to start loaning more to the private sector, stimulating economic growth. As you can see, in the years after 2023, it got really bad. It picked up for a bit, and then it got really bad to the point where we are in December 2022, where banks are lending more to government than they're lending to the private sector. So you can see that in bad times, banks are lending more to the government. In good times, banks are lending more to the private sector. So you can see the way banks are also flowing into this. So a debt restructuring signals more capital from banks going to the private sector and not to the public sector. As you can see, in 2004 to 2013, private sector loan growth grew 755%, while banks' loan growth grew 438%. If you look at 2013 to 2022, once again, government loan growth grew 438% in 2004 to 2013. 2013 to 2022, government loan growth grew 429%, but private sector loan growth grew at a much slower rate. So you can see the importance of a debt restructuring. Debt contraction leads to more capital going towards the government. Debt restructuring leads to more capital going to the private sector. And that is where jobs are created. That's where wealth is created. That's where economic growth happens. Okay. Other thing that you saw during the last cycles, we saw interest rates were at 50%. These were lending rates that we've gotten from the Bank of Zambia annual reports. Lending rates were sitting at 50%. But if you can see, they actually went down all the way down to 2013. They dropped to 16%. So they were on a gradual slide downwards, all the way up to 16%. And from there, they started to pick back up again. So you can see that there was it's not as high as it was the last time, but the signal that you do get is that it pressures interest rates down. Okay. So that's the thing you have to play in your mind. There is the pressure to see interest rates start to move in a downwards trajectory. The next thing that you also saw during this period, and I also want to point out this one even to break down what we're seeing in terms of loans. And where they were being settled, you saw that 64% at one point were in the government. In terms of domestic credit, this is not just bank loans, this is total domestic credit now. Total domestic credit, we saw about 64% of total domestic credit was, or 57% in 2004 was sitting with banks. 37% of it was sitting with the private sector, private business, and only about 6% was sitting with households. The rest was sitting with other institutions, but this is where we were. Now, if you look down up to 2012, and that's where we got the data, we saw that now it's switched. So after this, we saw capital move out of the government and move into private sector and households. So even saw households having more credit than government. Okay. And in 2012, we saw businesses having way more credit than government. But then from that point onwards, we saw the bounce back and the government really started to push its way back into the fold. So we saw now in 2022 at the point where two-thirds of loans two-thirds of credit in the system is sitting with the government, 22% is sitting with the business sector, 11%. This is as of Bank of Zambia annual reports. So this tells you a big story, that what to expect is you expect that number sitting at 62% of credit sitting with the government to start coming down. And then you expect the lime line, which is the private businesses, to start going up and the household loans to start going up. These are the preparations of what you should be expecting to see. Finally, all this stimulation, economic growth, FDI, everything converges and starts to result in wealth being created, because more activity, more money, all these things, this is how wealth gets created. Now, who this got created for, I'll get back to, but you also started to see salaries and purchasing power, as I said, going up. This is NAPSA figure. The average real salary of a Zambian went up by 112%, meaning the purchasing power. Now, these weren't the actual salary figures. This is them adjusted for inflation, base year 2000. So in other words, when you adjust for inflation and you're looking at the purchasing power of the average salary, it doubled in this period. So the average person earning a salary could experience that they were able to afford 2 times more things by the year 2013. Okay, between 2004 and 2013, the average salary earner was experiencing that they were able to buy 2 times more things because their salary grew at a much faster pace than inflation. Inflation slowed down and salaries rallied up. So what do you expect from a debt restructuring? The force of FDI that comes in stimulates a lot of business activity, increases labor demand, but also decreases inflation pressure. And you start to see real salaries start to take off faster, affordability of salaries. If you take a look, unfortunately, after that, when we went into a debt contraction cycle, what do we see? Remember, I said there's seasons to everything. When we went into a debt contraction season, what did we find? Real salaries started to fall down. they tumbled from 784 to 486. That's what you are starting to see. Finally, one of the things we saw was the stock market pick up strong because of increased economic activity, low inflation, and low interest rates. Increased economic activity means more revenue for listed companies. It's estimated that you'll see more revenue for listed companies. Lower inflation means lower costs. In other words, higher margins for listed companies. And lower interest rates means lower lending costs for listed companies. So lower financial costs, lower operating costs, higher potential revenue means increased profitability for listed companies. Also, flows of capital means increased listings in listed companies. And what do you start to find? Stock market index moved up 592%. So what do you expect? You're also looking on the grounds for a potential market rally as well because of all of this as well. So if you look at the broad spectrum of things, now, why do I say this is going to be the biggest wealth expansion in the history of this country? Because there's some extra factors in there. The 2004-2023 economic expansion was mainly driven by, was also facing record levels of food prices, record levels of oil prices that were continuing to rise because of the Iraq war. That was also affecting food prices. So it was strong inflation around the world. Now, right now, there's that, but it's starting to come down. So what are we expecting to see now? Well, we're also expecting to see copper prices going through a mega rally. Now, the last time, one of the things that also boomed economic growth was that China was going through a construction cycle. They were building up their economy, and because they were building up their society and they were urbanizing at a rapid rate, they were calling for a lot of resources. So the rapid urbanization of China called for a lot of resources around the world and also stimulated a lot of economic activity. And as a result, the copper price rallied very strong. Are we expecting to see one? Yes. One of the things that we also picked up from the and I'm going to play this clip very quickly here. This is from the former CEO of Glencore. Now, I often get reactions to his video because everyone wants to tell me how smart they are at the fact they know Ivan Glassenberg and he's a thief, blah, 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 all that stuff. But the important stuff is what he's saying. Okay, if you want to get to build wealth, understand the things he is saying. So if you listen to what he's saying, he's actually talking about what is going to happen for the new commodity super cycle. So pay attention to this video clip of Ivan Glassenberg when he's explaining this at the
and a super cycle that's very different from last time around.
In 2002, we had the Chinese coming into the market where you had the big push on commodities. The world wasn't ready for that amount of demand, and you had commodity prices rise considerably. Then the world sort of caught up a bit, but then you had the 2008 financial crisis, pushed down commodity prices. Chinese came in big with infrastructure spend in 2009. That kept it strong. Unfortunately, then the mining industry got the usual situation where they started producing too much, increased production, opened up new mines and started producing more. That pushed it down, and you had the 2015 commodity price drop. And now we got the rise with the infrastructure spending occurring in many places around the world. I do believe commodity prices will stay strong for a long while longer. You will have both parts of the world pushing infrastructure. You'll have the Chinese continuing with their infrastructure plan. They still got to urbanize a few 100 million people. And you have the United States kicking in, upgrading their infrastructure. The new green energy besides the infrastructure and all the green energy demand. Today, we got to substitute fossil fuels, whether we're talking about coal, oil, gas. That supplies 80% of the world's energy demand today. And we've got to reduce that by the year 2050. By 2050, you've got to produce 2.5 times more energy the world's going to need. You still have about 800 million people in the world who still don't have electricity. We've got to supply them electricity. You still have about 2.6 billion people in the world that still don't have clean cooking. So a lot of new energy has to be supplied to the world. Today, the world produce around about 3,000 gigawatts of renewable energy. We got to take that up by the year 2050 to 26,500 gigawatts of renewable. We got to produce 20 times the amount of solar energy that we're producing today, 11 times the amount of wind turbines and electric vehicles. We say we want to produce by the year 2030 to around about 55 million vehicles per year. But let's assume we can fill the gap of fossil fuels. The question is, do we have the metals to supply it? Today, the world consumes 30 million tons of copper. By the year 2050, we got to produce 60 million tons of copper per year. Now, if you look at that means we got to grow copper supply by 1 million tons per year. If you look at historical past 10 years, we've only increased 500,000 tons per year. Take the same if you take nickel. Today, we produce 2.5 million tons of nickel. We got to grow to 9.2 million tons of nickel. We got to produce an extra 250,000 tons of nickel per year. We've only been growing at about 100,000 tons of nickel.
But
Same goes for cobalt. Can supply meet that demand? Well, that's another debate. How quick the mining industry can increase and bring new projects on. New projects, I think, are going to take longer this time around. There aren't many projects around the world. We've developed most of the easy projects. We now got to go into the more difficult regions of the world where there isn't infrastructure, harder political environment, and I think the mining industry is not ready to add massive new tons to the market. I believe the mining industry is going to struggle to keep pace. Demand for commodities will stay for a long time.
So I'm going to say this to the woke community of our nation who will give me speeches about the history of that man. Read my lips. I don't care. What I care about is what he's saying. Okay. As the CEO of Glencore then, what I care about is what he is saying and what the implications are for the economic trajectory of the country and therefore the markets and therefore how people like you and I can capitalize on that. That is what I care about. If you want to have a conversation about his behavior, about what they've done to nations, about whether he should be in jail, blah, 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 crony capitalism, whatever, please, by all means, have it. I'm just not going to partake of it. What I will tell you that's most important is what he is saying. He is saying that demand for commodities is actually going to be stronger than we saw in 2002 all the way up to 2014 when China was doing infrastructure and building. Because he's saying that the infrastructure you're seeing in China, plus the infrastructure overhaul you're seeing in America, plus green energy, where you are trying to substitute fossil fuels, which produce 80% of the world's energy and electricity. You have to get that on board. Then you still have 800 million people who need electricity, of which 77% of them are in Africa. So you also have that issue as well. And then you're trying to promote clean cooking. So you need a lot more electricity for that. He's trying to tell you that you've got to ramp up your solar power 10 times. You've got to ramp up your wind energy multiple times. So this is the important part of actually building that, okay? So he's telling you that, but the problem in the world is that the world is only coming up with 500,000 tons worth of new projects, but the world needs 1 million tons worth of new supply coming onto the market, additional supply every single year. And he's saying, look, the projects are becoming harder to find. We're going to countries where there's no infrastructure, where political environments are a bit more tense. It's not as easy to get new copper. He's talking about nickel, the things that we've been investing in as a country, nickel, copper expansion. These are things that are being worked on. So I think this is what people need to understand going forward, that after 2025, you're expecting a strong rally in copper prices and a strong rally in metals prices, EV metals prices, lithium, copper, cobalt, all of these things, because they're in short supply. That's the first mindset you need to recognize. And I'm just putting your mind together onto this. That's the first thing you need to recognize going forward. Okay. Now, what does that mean? It means that companies, for example, like ZCCM, who now have a 3% royalty, are actually in a very advantageous position, because when that price picks up and the mining companies who are currently holding back stock, this is what they're doing. He even said that later in the interview, that mining companies are purposefully holding back stock below demand levels to maintain the favorable prices and maintain profitability. So they are holding back supply, waiting to see that when the demand takes off, especially when you start seeing smelter capacity in China, Indonesia, and India all coming up, and EVs now clocking from 10 million to where they're supposed to get to 30 million by 2027, and supposed to be at 50 million by the end of the decade. That is the expectation, that EVs are supposed to be at 50 million by the end of the decade, 2030. That level of growth, we're supposed to be seeing solar restructuring happening around the world, all these billions of dollars coming in renewable energy projects. That is a strong demand for copper around the world. That is what he means. These things are going to be required in all of this. Okay. And therefore, the mineral prices start to go up. And you're going to not be talking about $10,000 copper like we were talking about last time. We're going to be talking about $11,000 to about $15,000 copper between these two periods. Okay, so that, especially between this cycle. So the commodity super cycle is actually going to go on because we're re-electrifying the world and changing transport. These are massive changes in the world, the way the world operates. Massive changes. And it's going to create commodity shortfalls all the way through. for at least the next 10, if not 20 years. That is what was being told to you. We got a question here from MC Shalom saying Zambia should work on creating reserves for copper production to stay relevant in this process. Yes, but what you're seeing is probably your mining companies. You're not seeing a lot of output now because they're waiting for the prices to pick up. Okay, they don't have a perishable product that much. They're just waiting for the prices to pick up, and the prices are set to pick up around 2025. So that's when you can expect that takeoff to happen. So that's why I said this is going to be one of the biggest economic expansions in this country's history and the biggest wealth expansions in this country's history, because that's also playing. The second factor that's going to play to the biggest economic expansion is the global oil prices are also going to be affected. As we're seeing electric cars moving up, we're seeing demand for oil coming down. 2028 is when we're expected to reach peak oil, and therefore oil prices start sliding downwards as well. So therefore, remember that our biggest pressure on our currency is the importation of oil. So the actual crude prices will start to come down around 2028. The second thing is that we've been working on our domestic supply chain of fuel. In other words, we've been working on deals with Angola, trying to get that Lobito corridor moving as well. We're also, and remember that the refinery is set to go online by 2026. The pipeline between Namibia and Zambia is set to go online in 2029. These are things, these are structural things that bring down the cost of bringing oil into the country. So oil is expected to be cheaper, plus oil transport is expected to be cheaper. These are tangible policies that are supposed to bring down the cost, and therefore trade. There's going to be a stronger positive, they're expecting a stronger positive surplus in trade going forward. And the fourth and final thing is that we will be fertilizer independent by 2025. Remember that there's now your Chilanga factories for fertilizer. By 2025, you're expected to no longer need to import fertilizer in this country. And therefore, that gives you less to import. So when you add oil and fertilizer together, you're talking about billions of dollars that were supposed to go to, that was supposed to pressure our forex rate coming down. And at the same time, copper revenue starts going up. One, because you've got the government capturing mineral royalties, while you've also got ZCCM capturing a royalty at the same time. And you have those two profits, you have those two centers generating money coming in as well. Obviously, that's Kansanshi alone, but remember, Kansanshi is one of our biggest mines. So this is part of what we're trying to get towards as a country. And that's why I said, once you've gotten rid of your debt, and there's the usual work of improving the outputs of your economy, getting capital to more productive sectors, in bringing in investment that now also opens up more job creation. So once you've got capital flow and inflow, and then you've got slower interest rates, along with the stimulation of a copper economy, downward pricing in oil, fertilizer independence, all these things converging together are setting the ground for one of the biggest economic expansions of the country's history. So the question you need to ask yourself is, where are you in this? Because a lot of people are sitting, there's a lot of spectatorship. The last time Zambia, all that wealth was created, went from $2 billion to $22 billion worth of wealth created, but it resulted in very little because the Zambian people were not prepared. Okay, the Zambian people were not investing, were not starting businesses. The Zambian people were not investing in the stock markets. They were not investing in capital markets. So they were not financially participating, nor were they entrepreneurially and economically participating. So it's very important for the Zambian people to start participating. Grabbing things does not help. Taxing things does not help. Tax does not create wealth. Grabbing assets does not create wealth. Building businesses and building wealth portfolios is what creates wealth. Okay, I'm going to say that again. Grabbing things and taxing things does not create wealth. It is building things that creates wealth. So as a people, we have to get it into our minds that trying to get the government to become a foreign investor attack dog is not going to build a single ingwe for anyone. Okay, that is a reality. No one will get wealthy by trying to turn the government into an offshore. It's just a way to get the envy off your heart, but build something. Now, remember, this is the preparatory period. It's not like instantly all the stuff is going to happen. It is lining up and it's picking up. It's going to take a bit of time before you get that massive inflow that comes in. People are still working out their issues with higher interest rates in their own countries. They have to go through their shallow recession and come back out for them to be able to now start pushing money into your country. For the EV super cycle to come in, that's going to be in 2025. For the oil part to kick in, that's 2028. So you can see there's delayed effects before this thing kicks in, but the groundwork has been done to lower the government's fiscus. Now you're going to start seeing the interest rate component probably start coming down a little bit earlier than that, but that's also going to take time to slide down. But in the meantime, are you building your business? Are you learning to save and invest? Are you running your house on a budget? Are you doing the things required? Are you in training to be there when the tide picks up? Because a lot of people are trying to get ready to get on the plane when the plane is taking off. That's like what a lot of us like doing is like it's like the plane is about to take off. And when the plane is saying that it's about to take off, that's when you start putting on your clothes and trying to leave your house. You must be in the plane when it's ready to take off. So the question is, how many of us are in the parts of the economy where wealth is built when the plane is ready to take off? So ask that question of yourself. Where are you going to be when the plane takes off? Outside chitter-chattering with the rest of society, engaging in poverty habits, or are you going to be in the plane so that when it takes off, you are the beneficiary? So the people who are in the market, who are in business, who are growing their business, loans are not given to people who are coming up with ideas when the banks want to lend out. Loans first go to people in business who are already past the point of de-risking their business, building their business model, and also growing. That's who loans are given to, no matter how low the interest rates are. Loans are given to the people in the market, not outside chitter-chattering about access to capital. It's the people who have learned to find their customers. They've learned how to sell to them. They understand the product. They've built their business model. They've built their sales process. They've done everything inside. And then loans and capital go to those people first. Are you preparing yourself there? How many people are in markets buying assets now while they're still at the lower prices of the spectrum? Are you there, or are you now sitting saying, no, when it takes off, that's when? You're not the beneficiary of wealth creation if you are not always buying up assets and always selling products. That's what you have to do. Okay, so that's what I'm trying to drive at here. And so that's why today's Mindset Monday, I really wanted to set this conversation up for what I wanted to talk about today on Mindset Monday, and that is trying versus training, okay, or the ability to push your efforts. And if you've noticed, I've been going through this book called The Power to Change. And as a recap, we had this conversation about the desire to change and the power to change. And many of us are in our bad states because we have a lot of desire but no power, okay? And it's because we think our wishes and our hopes and our aspirations are enough to effect change, and that is wrong. Desire is longing, hoping, and expressing a wish. Power is actually having the ability and capacity to affect change. Now, last time we talked about the 6 principles of identity-driven change, where we defined power versus desire. We talked about the power of you, that you do what you do because of what you think of you. We talked about the fact that change does not happen by behavior modification, but internal transformation. We talked about the fact that you must learn to identify who you are, not by your past mistakes and what people have said about you, but by your true potential. Your true potential is truly who you are. And if you have the capacity to make good decisions in wealth and business, just like other people have done, then that is truly who you are. You also have to start gauging into long-term planning as to who you want to be in 10 years. So as I said, there's an economic super cycle about to take off in Zambia. And the question is, who do you want to be at the end of it? Do you want to be the people who are angry and become bitter socialists, busy saying the government must step in and take on the rich, as if the government is ever going to do that? All you ever do when you put socialists in power is make them rich. That's all that ever happens. It changes from rich bankers to rich politicians. That's all it does. But the poor still remain the poor. The poor never stop being poor when it switches from capitalism to socialism. Okay, or from socialism to capital. It never switches. The poor don't stop being poor by a change of economic ideology. They stop being poor by personal decisions and opportunities. That's how that happens. Okay, So we have to start working on how to start doing it and making the decision of who do you want to be at the end of this? Do you want to be the same bitter person trying to get politicians to change your life? Or do you want to be a person who's got the power, who use the power to change your life, change your family tree, and become more influential in society? Also, we talked about the 3-stage model, that you have to change your identity, your character, and then your direction. These are things you have to start looking at as well. You have to look at who do you believe you are. Then also from who you believe you are, what is the characteristics of that kind of person? And then what service are you being sent into with that identity and characteristics? And then finally, also what you start calling yourself. If you call yourself the wrong names, you're going to be the wrong thing. So you have to start calling yourself by your true potential, because that is kind of the thing that actually works. That's affirmations. They actually do work, people. They actually help drive people. So today's topic of discussion, I want to talk about the 4 principles of efforts of change. Okay, from goal setting, trying versus training, developing discipline, and habit execution. These are 4 important areas. So the first one I want to talk about is so in the chapter, in the second part of the book, he talks about the things that goals are not how you begin. Though goals are not how you win, but rather how you begin. So one of the problems we make is that we think the goal is the end point, when really actually your goal is the starting point. Your goal actually determines what habits you're supposed to be executing. So firstly, I think we need to start understanding what is the purpose of a goal, even an investment goal. What is the purpose of it? The purpose of a goal is to keep us on track. That's the first one. It's to provide us with direction to make sure that we don't get lost as we are executing a habit. The second and most important thing about a goal is it reveals the habit. If you tell me you've got a goal to reach 3 million kwacha worth of wealth, then we know that the habit is X amount of kwacha saved every month. So if I know the time and the amount, I know how much you should be saving and where you should be putting it. Those are now habits and actions. So goals are there for direction. They're there for revelation. They open up what habits you are supposed to be doing. If your goal is to grow your business to 1 million kwacha business, then the action is to make how many sales per day. And if you want to try and execute that many sales, how many sales calls do you need to make a day? Because that's an action now you can take. What action can you take in order to reach that financial goal for your business or even for your wealth portfolio? The third thing goals offer you is a point of refinement. They're good for assessing the efficacy of your habits. So every week, every month, you look at what your actions are doing. Are they yielding the progress that you're looking for? If not, maybe start looking at how to keep improving them. And if they're not yielding the progress that you're looking for at the pace you're looking for, then you've also got to look at, how do I improve this? Should I be increasing the savings rate? Where should I be putting the assets? Should I be calling a different subset of customers? What should you be doing in order to improve that? And also, goals also serve as inspiration. They also help you remember why you are executing this habit, and they give you the energy to execute a habit. So the purpose of a goal is not the end point. The habit is the thing that transforms you. The action of saving, investing, budgeting, selling, these things, solving problems, these are the things that actually generate the outcome. So James Clear says, look, if you focus on the system, the scoreboard tends to take care of itself. So if you focus on constantly executing the system and improving the system, the scoreboard has a tendency to take care of itself. Okay, so that is what the goal is. Yes, the goal is to win a football match, but you kind of have to get on the field and actually shoot to do that. Okay, so that is the reality. So that's the first part I want as many of us start looking at. What is your goal at the end of these 10 years? Now translate that into, what must I be doing today in order to start moving in that direction? Okay. And therefore, we get into our second conversation about trying versus training. I think this is one of the most important parts of the book. It talks about the fact that you need to stop trying and you need to start training. And he defines it as, trying is a once-off effort in the moment. Okay? Trying is, when I get my gratuity, I'm going to do A, B, C, D, ba, 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 and then I'm going to be able to invest and I'm going to be rich. I'm going to build my wealth once it hits my hand. Or when I get my salary, that's when I'm going to do the right thing. Training is effort. So trying is effort in the moment. Training is effort leading to the moment. So training is the strategic habits that lead up to the moment and the disciplines and deliberate practices that you do. So training is when you start writing a budget from where you are. Yes, your salary is coming in 2 to 3 weeks, but you've started living on a budget. You've learned that I've got to start learning to budget my money before and live according to a budget before money hits my hand. And I've got to train myself so that when more is given to me, then I'm a budgeting individual. One of the things you find about people who have got very good with wealth is that they budget even when they started budgeting, even when they were earning smaller amounts. So when they were started earning bigger amounts, the same disciplines were completing through. They didn't start budgeting when they were earning more. They started when they were earning less, and they kept that habit going forward. So the people who are investing started investing when they were earning little and kept that habit going forward. The people who are running businesses, the successful big businesses, started with a very small one and grew the same habits of selling, solving, serving all the way through. So the reality is you've got to start building the habits and executing them no matter what state you are in. And having a training mindset is about doing that. It's about learning to execute habits while things are not at their greatest. So that's one of the things you want to try and focus on. And then the third component that he talks about as the factors of effort is desire versus discipline. So you can desire all you want. You can, and this is, I think, where we even as I talk about this wealth expansion that's coming, you can desire to be part of it all you want. You can hope, you can wish, you can attend overnights as much as you want, as much as you want. You can do those things. But the reality is you will only see the outcomes of those efforts if you apply the discipline. So he points out three things in the book. He says discipline is choosing what you want most over what you want now. I had a bit of a quandary this morning. I got into bed and winter befell me. I had a morning exercise routine I had to try and do, and I was in bed and I was battling until I asked myself the question, what do I want most? What I want now is to continue sleeping in the comfort of my blankets. What I want most is to have a healthy and prosperous life. What I want most is to be able to live a life without the health encumbrances that I don't want to be likely to face in my future. So I got up because I asked the question, and that is what gave me the discipline to execute what I needed to do in the morning. So it's asking yourself the question, what do you want now over what do you want most? And discipline is choosing what you want most over what you want now. Okay, so it's not about just whipping yourself. It's asking yourself, what is the thing that has the most important thing? And most of the people who lack discipline often cannot see what they want most. That's the truth. They often have a problem picturing and engaging in what they want most. So if you have done your future you testing, your goal setting, it really asks you if you've done it properly and you've tailored it to yourself, then you really start to know what you want most. It's also stated that the path to public success is often paved with private discipline. Most of the things you see people achieving in this world is a result of the things you didn't see them doing. Okay, you didn't see them, and they were very consistent about doing those things, but you didn't see them doing those things. You don't see people budgeting. You don't see people doing specific things. You don't see these things. So it's the things you don't see that drive the outcomes you do see. So that's the mistake we often make. We don't see the habits that people are executing in order to get to the positions that they're in. We don't see the practices that they're getting to. In fact, because we don't see them, we then tend to call it witchcraft. That is where the problem comes down. Because we don't see the habits that they do in private, we then start to get our suspicion hat on and we assume it's witchcraft. So these are the things that we need to start working on as people and making sure that we're doing that. And the third thing he talks about with discipline is the pain-pleasure trade-off. This is the mindset you have to have if you want to capture this economic wealth expansion. And what he says in the pain-pleasure trade-off is that every decision has got pain and pleasure. Every decision you make in this world has got pain and pleasure. Every action you take has got pain and pleasure. But the difference is that a good decision has got pain up front and pleasure later. A good decision requires you not to spend your money. That's a painful experience. Not spending your money and putting it into an asset for a later thing. Delayed gratification is painful, but it bears fruit later. Okay, so in good decisions, pain is upfront, pleasure is delayed. In bad decisions, pleasure is upfront, pain is delayed. You borrow money upfront, you spend it, and then you enjoy it then and there, and repayment is later. Okay, so these are the problems. In all decisions, ask yourself a simple question if you want to remain disciplined. Am I going to train myself to take the pain up front, to learn to take the pain first? If you can take the pain first and then take the pleasure later, often you find that most investors part with money. They take pain up front. They lose money at the beginning and then they gain profits later. Now, people who are handout lovers, they take pleasure up front and they take pain later. Okay? So the act of learning to delay your gratification is the core tenet of discipline. And if people can start to learn to delay their gratification, then you'll stop depending on politicians for everything. You'll stop demanding that they change your life for you, and you'll start doing the things that will change your life. You'll start studying to improve your skills. You'll start making the sales calls that you need to make. You'll start saving and investing the things you need to do. The things you need to do. The people who are improving are either saving, studying, or selling. They're doing these three things. Okay, they're doing these three things. The people are going to benefit, and those are painful activities up front. They're very painful activities up front. Okay, but it requires us to be able to do them. So ask yourself in every single point, whenever you're trying to build a discipline and habit execution. And I know I'm going a long way on this one. Habit execution is one of the most important things. So focus less on the outcome and focus more on the next step. Okay. What are the habits? If you focus on I want to be a millionaire, I want to be only, if you're totally focused on that and not focused on the actions that it takes to get there, you're going to be disappointed. People who focus on goals and not focusing on actions are very easily disappointed. I've gone through that myself. But people who focus on the actions more than the goals have a tendency to be very motivated. Okay, so are you focusing on budgeting this month? Have you written your budget? Have you written out your investment plan? Have you planned these things? Have you set them? Are you doing the things every single day? What are the actions you're supposed to be taking? Are you logging your spending every single day? Are you budgeting your time every single day? What are the things you're doing every single day? These are the things that are going to determine. One of the things I really wanted to press on today was input versus outcome thinking. That a lot of us have a tendency to think of outcomes more than we think of inputs. Whenever we see someone who's successful, we desire what they have, but we don't desire to do what they did to get to where they are. And this is the biggest mistake. Obsess with successful people's habits more than their stuff. If you learn to do that, you often find that you're able to learn. If you obsess with people's stuff, you envy. If you obsess with people's habits, you get educated. Like, these are the simple trade-offs you have to start making in your life. And these are the things you have to start doing. What did wealthy people do to get wealthy? What did they practice? What activities were they doing? Not what do they have. If you have the mindset of what do they have, you'll be envious. If you have the mindset of what they did, you'll be educating yourself and bettering yourself. So remember, I've always given you this chart of what wealthy do. And I'm just going to go through the Dave Ramsey one. 94% of them live within their means. Are you living within your means? 75% of them don't touch credit. 80% of them save for retirement. And in fact, their biggest wealth is built in their retirement. 70% of them make regular investments in unit trusts or mutual funds. They have a 28-year spectrum for making their wealth. They start, 79% of them start with nothing. 85% of them are not chief executives of companies. 69% of them are not top 10% earners. 62% of them just went to regular universities. So already the behavioral patterns of these people, what habits are they practicing? They're working very hard. From the millionaire next door, they're working 45 hours a day. They're studying the things they work in. So what are you seeing? Are you studying the things you're working in? Are you working 45? Are you working many hours a day? Are you making regular investments? Are you budgeting? Are you living within your means? What are you doing? Okay. So if you're trying to be on the top of the spectrum, perhaps maybe practice the things that these people do instead of calling it witchcraft. So one of the things you'll notice, and I will say this in all honesty, it's because they here's an interview, by the way. I want to share this. This is an interview done by Trade. I think that was done on CNN of Trade Kings, and they talk about having a journey mindset and not a destination mindset. And you think about, listen to it very carefully.
CEO. He comes out whenever I sit with the group CEO. He comes out sometimes with some good one-liners. Once he told me, Lux, the perpetual quest to remain as number one or first amongst equals is a journey, not a destination.
So that's a very simple thing. The perpetual quest to become number one or to stay at number one is a journey and not a destination. Okay, so this is why I was saying the efforts you are putting in to trying to get to your goal, you need to start looking at the training habits. You don't become a better boxer by wishing you can beat Mike Tyson in his prime. You become a better boxer by training, by doing what it takes to actually do that every single day. And he says, trying is hoping to become something you are not, and training is becoming better at something at what I am. Okay. So knowing that you have the capacity to do the wealth building activity, training is becoming better at things. Trying is hoping to become something. Training is learning to become better at things. And it's an incremental process. It's a process mindset. It's a journey mindset. It's not a destination, results, and outcomes mindset. You look at the inputs, you look at lead indicators, you're looking at your actions, you're looking at your everyday activities, you're tracking your progress regularly. These are the things you're supposed to be doing. And you don't have the time to do that if you're sitting bantering with people, lobbing shots at each other. You don't have the time to do that if you're doing that. So you've got to make a choice between the entertainment and the entertainment and the fluff of life, or the things that you are. So you have to ask yourself, if you want to be disciplined, what do you want most? What do you want now? And choosing what you want most is exactly what discipline is. I do urge, I recommend this book for as many people as possible. I would have showed you. In fact, tomorrow I will show it. There's a clip I'll show you tomorrow just to emphasize this point. But as I said, this country is about to go into the greatest economic expansion of its history. The question you want to ask yourself is, where do you want to see yourself in the next 10 to 20 years? And where do you want to see yourself in the next 10 to 20 years will be determined by the level of discipline that you invoke, by the mindset of by moving away from trying and starting to move to training. Stop using the word trying. It's a very dangerous word. Even try it in your regular vocabulary. See, right there. So remove it. Train yourself to start saying the word training in your regular vocabulary. Remove the word trying. Trying gives you a way out. It tells you that if I fail at something, it's fine. You have not failed if you're training. You're always getting better if you're training. No matter what, as long as you get on the training mat, you're always better. As long as you're budgeting. I don't know anyone. If I sit down with guys, and I'll tell you this honestly, as long as a guy runs away from as long as you run away from debt, as long as you run away from alcohol as much as possible. I'm not talking about you have to just quit, but I'm talking about like boozing yourself to a stupor regularly. And as long as you get away from playing around with tons of women, and you get into the habit of budgeting your money and you're on a plan, if you do those 5 things, stay away from those 3 and start doing the other 2, and you learn to work hard. In fact, let me put it this way. You learn to work hard. You go into work 30 minutes earlier, you leave 30 minutes later, and you work yourself to the bone in those periods of time. Okay, you go into deep work, you cut down the social media. If you work intensely, manage your money intentionally, and you stay away from those 3 vices I pointed out, debt, women, and alcohol, if you stay away from these 3 things, I don't know a guy who's not going to build wealth if you do that. I don't know a guy who will not build wealth. But I can tell you that if any guy, no matter what they're earning, we can always track somewhere in these 3. In those 5, somewhere in those 5, something's not right. I can guarantee you'll find somewhere in those 5 that things are not right. And every person can attest to this. Even myself, at my worst times, I can attest to where there were issues in one of those 5. So look at the 3 vices you should stay away from, and look at the 2 things of learning to work extremely hard and learning to manage your money intentionally. Work intensely, manage your money intentionally, and on top of that, stay away from those 3 vices. And I can tell you that you're probably going to achieve a lot more financially at the end of this period than most of your peers. But also watch out for having peers who cannot control themselves in those 3 areas or in those 5 areas, because I promise you it'll rub off on you. So with that, I'd like to wish everyone a good day on Mindset Monday today. Get your mind right, get your money right, get ready for war. To all of you, I wish you a great and wonderful day.